VIP's market position. So these three snapshot which you are seeing in the bottom, we have taken it from a IDBI report. We have given the source and the disclaimer in the report. We just wanted to make that sure. So these are from an IDBI research report. We just thought was very helpful in understanding what is the EBITDA margin of VIP, Safari, and Samsonite, and how they are doing. So VIP is, as we discussed earlier, VIP is between Samsonite and Safari. Safari is basically into lower margin business, and Samsonite is into a higher margin business. But VIP is the only player where it gets good revenue from both high margin and low margin business. The reason for having good presence in the low margin business is the backpack division. If we take the pre-COVID scenario, and even if we assume that the normalcy will resume post the COVID environment, the backpack segment is going to do much better, right? So that is where you can't ignore that segment, and that is where the margins of VIP is a little lesser than Samsonite, right? And if you look at the last, this one, mass, economy, and premium. So in case of mass, VIP has one presence. Most of the economy also, they have so many brands, and they also have brands in the premium segment. But you don't see that kind of a wide presence in case of their other competitors, Safari and Samsonite. So what is the current market position? The second largest. It is the second largest after Samsonite, and Asia's largest luggage company, 46% market share, and leader in the organized luggage segment. And we expect once the normalcy comes in case of the travel sector, there is no doubt that demand for luggages will also be there, and VIP would benefit from that. Again, just like Thomas Cook, VIP's balance sheet is also very strong. They took some loan, around 200 crores of loan in at the start of the FY21, but they have been able to even repay 50 crore of that. So right now the loan is around 154 crores, right? And if you compare 154 crore with the cash and investment they have in the balance sheet, so the net they are cash positive. So net debt basis they are negative. So that again highlights that their balance sheet is very strong. We don't have the balance sheet of any unorganized players, but I'm sure if you go and check their businesses, they are facing a lot of problems, because an unorganized player anyways give a lot of credit to their customers, to their dealers, and on top of that, they don't have that kind of a balance sheet strength in terms of high cash on books and ability to raise long-term debt. So they are facing a far more bigger problem than a company like VIP or Safari. So that is where we like this company at this juncture. And again, 2 years down the line, if we assume that the normalcy will come back, sales of 1785 crore was there in case of FY19, and if they make the similar kind of sales in the next year, in FY23 or say FY24, the profit would be much higher than what it was in FY19. Why? Because they have gone through a lot of cost cutting measures. Some of them will be temporary, but some of them will be permanent. Like they have closed down 100 stores. They have made their structure a lot of lean, and that has reflected in their cost saving and cash improvement over the last 1 year. So if we look at the further the PE ratios, VIP over the last 5, 6 years, 7 years has been trading at a median PE of around 40 times. Why? Because in a pre-COVID environment, when we couldn't think of something like a COVID disruption, the demand and the market was looking at a huge demand for this company. And even today, if COVID goes back, the market will again probably value it at the similar price to earnings ratio. right? So from that perspective, if you believe that 40 times uh, price to earnings ratio is possible for market to give to VIP over the next 2-3 years, today at around 5,100 crore valuation, it still offers you about 50-60% return over the next 2-3 years. But again, there's a big if the travel, if the COVID stays here for long, if the travel takes a longer time, VIP is going to suffer a lot, and we are not going to see that normalized year anytime soon then. So that is a big risk when you invest in VIP today.